So the deferred sales trust was incredible because it gave him the partnership freedom. One partner wanted to just pay his tax and be done, so he paid his tax. The other three did the deferred sales trust without having to do a 1031. They paid off their debt. And the best part about this, again, they did this deal last year before a lot of things shifted. They've been sitting calm.
A lot of people use 1031s. Obviously, this is a different structure, different strategy. One of the benefits is that you don't have the time sensitivity that associated with the 1031. So you have a little bit more time. Let's say you anticipate there's going to be a market correction, for example. You can't really take advantage of that with a 1031. You're forced to replace the capital in short order. With the deferred sales trust, the anticipation is you can actually wait. You can wait indefinitely. That's in my understanding, if I remember from our last conversation.
Yeah, you're nailing it. In fact, part of the chapters in my book, I'm talking about a tactical DST planning, where you're really getting down to the details. And part of the strategy, or part of the one thing I would encourage you to practice, is take a piece of paper and draw a line down the middle of the piece of paper, and essentially make a list and reverse engineer where you want to be, and write out what strategy is going to help you get you there. And then you're going to rank from 1 to 10 what's most important to you. And here are just a few ideas. I mean, capital gains tax deferral is one of them, right? That's financial. Income tax deferral, which is sometimes overlooked with the DST. Are you charitable giving? Maybe donor advised fund, right? Do you want optimal timing to be able to dollar cost average or buy when you want to, versus the 1031, shotgun wedding? Do you want diversification? Do you want to pay off debt? Do you want estate tax elimination? Do you want an alternative to a 1031 exchange altogether? Maybe you need a backup plan. You want to actually go for your 1031, but you want something to rescue it. Do you want to be able to sell a business or other assets that aren't 1031 eligible? Do you want liquidity, retirement, time and location freedom, no more toilets, trash, and termites, increased ROE, new depreciation schedule, partnership freedom, location freedom? These are just a few of the ideas. And then rank them. What's most important to you? Like, we just did a deal in San Diego. It was 4 partners selling a $13 million car wash, and they bought the land for about $500,000. It was one of those old taco stands. I don't know if you've ever been to San Diego. They're like the best, California burritos, I think, in the world. They're so good. Unless you probably go to Mexico, then they're even better. But the point is, there's like a taco stand there for like 20 years on about a 2-acre parcel in a kind of a rundown area. It's called Chula Vista of San Diego. Well, these clients of mine, they bought the land, and the way they made the deal is they said, this gentleman who's in the taco stand, they go, look, we're going to create a big old amazing $4 million car wash, but we're going to put you at the center of that car wash. So our people are getting their car washed, they can get, great Mexican food. He's like, great, we'll probably triple your sales. Fantastic. So he took the deal, made the deal. They bought the land, they develop it. Well, guess what? The value went to $13 million. So their exit was a huge capital gains tax, about 40%. But guess what? It's a partnership. In a partnership, the 1031 typically everyone has to go to the next deal, which means in this scenario, they also had some debt. They'd have to go find a $13 million deal or greater, take on equal or greater debt. And guess what? The whole partnership didn't want to necessarily do all that. They didn't want to take on a bunch. They're in the business of developing and selling at 13 million, not paying for assets that are already built for 13 million. So the deferred sales trust was incredible because it gave him the partnership freedom. One partner wanted to just pay his tax and be done, so he paid his tax. The other three did the deferred sales trust without having to do a 1031. They paid off their debt. And the best part about this, again, they did this deal last year before a lot of things shifted. They've been sitting calm in passive, mostly lending, multifamily lending funds that are paying about 10, 11%, not subject to the big stock market shifts. And they're just waiting. And some of them gone into hotel passive developments. And they're really happy with what the deferred sales trust did for them. So everyone's a little bit different, but hopefully some of these stories are giving some people some inspiration.